Hey, this is Danielle, and welcome to the earnings season kickoff. All right, well, thank you for joining me. So, today, what we're going to be talking about is going to be the importance of basically all the events that are going to be coming up really between this month and then, the beginning of August as well. Still also has quite a bit of earnings reports. So going into earnings season, there's a couple really important things to keep in mind. Number one, the stock market moves as it relates to catalysts, and one of the main catalysts that we've had this year is inflation. Right, we've had inflation. That's been a pretty big issue. And one of the ways in which inflation is going to show up even more is going to be through earnings. Now, previously, when we were in the bull market, earnings used to be one of my favorite catalysts as far as looking for trending directional moves to the upside. That is because earnings was, basically corporations' opportunity and moment in time for them to come out and say, hey, guess what? We're doing amazing. Our sales are going higher. We're making all this money, blah, 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 blah. And so what we used to see is when earnings season would come about, which would typically be July, August. The October, November quarters has always historically been pretty weak, but usually the July, August quarters pretty strong. Um, what we would historically see is we would historically see this strong move higher going into those reports as investors would say, hey, guess what? We have a reason to buy stocks because these companies are doing well. They're strong. They're making money. They're continuing to grow. And so, what used to be the case was that when earnings would come up, we would start to get long into a variety of strong companies that we could trade higher going into earnings season. Now, that all pretty much completely changed with the arrival of the bear market because what happened was instead of corporations coming out and saying, hey, guess what? Everything is so hunky dory. Don't worry, we're making lots of money. They started coming out and they started noting the different economic impacts that were happening and that was ultimately impacting their bottom lines. So what has occurred this year is we had an earnings season that started in January. That was really kind of the final kick in the can of the bull market right there. We'll talk about that move in a minute. Then we had another one came April, May, and now at this juncture we are, 7 months into the downtrend, and we are upon another earnings season. So if you look at, the last two quarters in which we saw a large amount of companies reporting earnings, and then you see the impact that it had on the indexes, that's why it's important to pay attention to what companies are reporting when. Because even if you have, absolutely zero interest in trading an earnings report, it's still really important as a trader to have in mind, when these major catalysts are occurring, because they cause some pretty big market moves. Now, me personally, going into this quarter, I do have a bearish slant on this. This is for a variety of reasons. Number one, we're in a downtrend. We're in a downtrend. We're in a bear market. So just from the sheer standpoint of sticking with the trend, there's that. Okay. But the primary reason why I am pretty bearish this quarter in particular is because of all of the impacts that we had. You really have to think about the macro impacts that occurred over the course of the last quarter. What are events that happened that could have possibly impacted the bottom line of American corporations. So when you look at those impacts and you say, okay, well, let's just think back over the last 90 days. One of the major impacts that occurred was the price of crude. We had, record high gas prices. We had, starting off from April going into June at least. I mean, gas prices just continued to go higher and higher and higher. Yes, they have come down recently, just in the last, 2-3 weeks. But if you think about it over the span of the entire quarter, that is absolutely an impact that we're going to see through earnings. Now, there's a pretty wide variety of companies that have to deal with transportation costs, right? So if you think about, okay, well, what kind of companies could possibly be impacted like that? I mean, definitely anything in the transportation sector. So here's the transportation sector. Transportation sector has pretty much been going lower since last November, and it's in a downtrend, right? So, I mean, that's one major area. Then you think about consumer discretionary. Consumer discretionary is going to encompass really anything you'd buy that you don't really need. And a lot of those things are going to be physical products. And a lot of those physical products need to be shipped. And those shipping costs are therefore higher. So when you look at that and you say, okay, well, do we think that's going to have a big impact on consumer discretionary? Well, yeah, I mean, I'm expecting it to. So, those are just some brief, macro examples as far as, what could potentially impact this quarter's earnings season. Then you have the dollar. The strong dollar is definitely going to impact corporations. And it was, in fact, Microsoft that already came out a couple weeks ago and said, hey, you know what? We have to lower our earnings estimates and revise those to the downside to account for the strong dollar. Dollar keeps going up. It's going to negatively impact tech companies. Then you have the semiconductors. Semiconductors, another pretty key and pivotal area. The semiconductors have been in a downtrend since, well, I wouldn't say November. They topped out in November, but they finally broke in January. Semiconductors have a variety of issues between, a lot of them being produced in China and the issues that they have had due to COVID, plus the high transportation costs, plus the semiconductor shortage. So semiconductors as a whole are a little bit weighed down right here as well. And the semiconductors are going to make up a pretty decent, portion of the NASDAQ. So when you're looking at the NASDAQ and you're saying, okay, well, semiconductors kind of have a lead weight on the bottom of them there. Is that going to potentially hurt the NASDAQ or help the NASDAQ? Well, it's probably not going to be helping the NASDAQ, because if you look at the NASDAQ top 100 stocks, and if you focus on, what are the top 100 stocks in the NASDAQ right now? Because see, those are the ones that are going to be moving the NASDAQ the most. Okay. And if you say, all right, well, which companies on this list are going to be negatively impacted either due to semiconductor shortage or the rising dollar or transportation or oil costs or any of the things I just listed? Well, you go down the list and it's like, well, a pretty good portion of them. Then you have some Chinese stocks here in the NASDAQ. China got pretty hit today. There was some more news out of the Chinese government and all the different rules they're trying to place on their Chinese internet stocks. And that has just continued to hamper that has just continued to hamper the Chinese internet stocks. And today they took a nice turn for the worse. And some of those stocks are actually in the NASDAQ. So, you've got JD. Somebody was asking me just a little bit earlier if this was at a good spot to buy. I can't deny that the technical pattern looks pretty good to the upside if it can hold here, but I just have a really hard time trying to buy anything that looks like has a trend like that. So when you look at all of that and you say, okay, so I can see that you're a little bit bearish. Is there anything that would change your mind, Danielle? And there is a great question. Do you look at analyst revisions? Now, one major impact that is already starting to occur is we're seeing analysts revise their estimates, and we're seeing analysts upgrade and downgrade stocks, mostly all downgrade. I do think that one potential positive little shining star in this earnings season is that if sentiment is bad enough, if people are like, well, inflation's bad and this is bad and all these other things are bad. And if analysts start revising those estimates prior to earnings and they lower expectations, that's kind of like the one chance that the market has to actually then beat those expectations, because the market really works on expectations. And Microsoft, like I noted, this was a company that came out and already said, hey, guess what? We're not going to make as much money as we thought. So because those expectations were lowered, it's possible that the expectations are low enough that they actually do well. So yes, that is an important factor. But when you talk about all this and the macro trends and it's like, oh, it's so much to follow, what do you do? Well, the main thing that I like to focus on is the patterns and the setups. So this is my tool. It's called the Earnings Hot Zone. Basically what it does is it just puts into numbers what I have always done manually. So every quarter on earnings, I basically look for 3 different things. Okay. So I start off, and with any stock, you can do this. And with any sector, you can do it as well. So for example, let's actually just start off with the banks, because banks are coming first. So at the beginning of earnings season, the banks always kick it off. And then usually Netflix is next, and then Tesla after that. So what I always like to do is I like to start off by analyzing just XLF. And I just like to say, all right, do I think that the banks are going to positively impact the stock market this quarter or not? And it is always important to note that even though, I do have my opinion, obviously, I am 100% willing to say I'm wrong. Okay. Like, I do think that the banks are going to trade lower, but if they end up trading higher, that is going to change my overall focus, because banks are critically important to the way that earnings season starts off. All right. Right now, what you can see is that the banks, they're in a downtrend. Topped out at the beginning of the year. Every time they tried to rally, they haven't been able to make it through. So for that reason alone, I'm bearish the banks. But the main reason why I'm bearish the banks is because of what they've actually done the last 2 quarters. So when you look at earnings and you're trying to, pick through the pieces of data that are the most important and that can actually help you make options trades, there's a couple different things that I like to look at. Number one, obviously, I like to look at what the stock actually did on earnings. Okay. So in this example with JP Morgan Chase, last quarter, it gapped down overnight 3.5%, which was about $4.60. Quarter before that, gapped down negative 4.4%, which was about $7.50. Now, the reason why those two numbers were impactful is because if you look at JP Morgan, the previous 6 quarters, it didn't move like that. It had 1% moves, 1.5% moves, 2.6, 0.5%. So what this tells you is that when the bear market started, JP Morgan had not just worse earnings, but also a significantly worse reaction to those earnings in the context of the bear market. So when you look at and you see, okay, well, what was happening going into JP Morgan earnings? JP Morgan earnings was on January 14th. So if you look at how it was trading just prior to earnings, look at that. So if you go all the way back in time to January 13th, before we knew there was going to be this crazy market this year, and you said, hey, JP Morgan, I mean, they've traded lower, but we're right near all-time highs. Banks are strong, yada, yada. Then what ends up happening is their earnings come out and it breaks the trend. Okay? Completely broke the trend. If you go back and if you look at what ended up happening on the S&P overall, and if you go back to January 14th, which was right here, that was literally like the last day before everything fell apart. So, the market made new all-time highs. It hit 4,800, pulled back, started to bounce. It looked like it was going to make another run for 4,800. Then JP Morgan comes out and the rest of the banks, and that was when the slide really happened. Then it happened again last quarter. In April, see, their next report was, let's go back and check that out. Next report was on the 13th. So it wasn't the exact day that time, but we had been falling. We were holding support. It made a little bit of a try. I think this was Netflix earnings, and then it just rolled over and died again. Let's actually look at Netflix. I was going to look at that one next. So Netflix is another one that's had a very critical impact on the stock market because, banks, it's one thing. Yes, looking at bank earnings is important, but they're not going to be those major heavy hitters like, Google or Netflix is. So when you look at Netflix and you see the days and times it reported, okay? So it reported on the 19th after market. It gapped down 29%. Let's see, where was that? So Netflix reported right here after market. The market tried to make a go of it 1-2 days, and then after that was when you saw Tesla report, Microsoft report. I think the Tesla move last quarter especially was pretty critical because it gapped up substantially and then it just rolled over and died. So the moral of the story here is that earnings as a whole has a pretty big impact on the market, and what ends up happening with earnings is going to move the market one direction or another. So the question here is, all right, well, if we think it's going to move, where do we focus? Well, that's where I start getting into some scans because I like to look for a variety of setups. There's a couple different ways you can do it, and I can just go back and use Tesla last quarter as an example. But basically what I like to do is I like to start a couple weeks in advance, and I like to look for companies that are statistically backed. And what that means is that they have an actual pattern going into earnings. Now, companies will usually have a pattern going into earnings if they're a higher beta stock, if they're a little bit more talked about, if they're common in the media, if they're popular. The reason for this is because It's just kind of a bandwagon thing, you know? It's like, oh, Tesla earnings is coming up. You're gonna buy it before the report, that kind of thing. So if it's some random unknown company that's not highly traded, low volume, illiquid, that kind of thing, the setup is not usually going to work. What you really need are the tickers that are highly traded in the options market. And the more hyped up, the better, especially as it relates to anything that was a recent IPO in the past couple of years, anything that's like heavily retail traded. Those are the ones that usually are going to make bigger moves. Now, like I was saying, I did all of this ever before I had the indicator, so you don't need the indicator, but I do find it helpful just for visual. But I mean, before I had it, I just did it all manually. So what you want to do is you want to pick out your stock, and then you want to look for your time frame prior to earnings. So if we have just a regular chart, I can even just go to a regular chart here. So this is the way I used to do it. So all you have to do is turn on your little earnings bubble right here. And I think that's in, just do style, I think it's in here. Style, settings, and then go to equities. And then you can see right here, the show corporate actions. Check that little box, and then your earnings dates will come up. So basically what you want to do is you want to start by looking at a ticker and trying to identify if there is an actual pattern going into earnings. So you can just kind of highlight it just like this. And you just manually look at it and say, okay, is this a ticker that normally goes higher, goes sideways, or goes lower going into earnings? And specifically, what's important is to look at the way that those patterns have changed over the course of the last 6 months. Now, Tesla is one that I really like to look at, but right now, especially, there's a lot of really hot ARK stocks that are on the docket, and I'm going to show you that these are my favorite ones that I'm looking at this quarter. So for example, if you take into account the last year, because that's really when things have started changing pretty substantially, and you say, okay, I want to look for stocks that are highly traded, have high volume, they have enough options activity, and I want to find some that I think are trending, going either direction, going into earnings, higher or lower. And I want to find ones that are likely going to move because either A, investors are talking about them and thinking they're going to do well on earnings and therefore it's going to trade higher, or B, investors are looking at them and saying, oh dear God, if this falls again, I'm not going to be able to take it. So I'm going to close out this stock before the earnings date. Now, between those two options, one of them being things are great, let's buy it before earnings, or things are not looking good here, I want to bail on this before it falls another 10%. Which one do you think is more likely in this current situation that we're in? What we've seen, you know, as a really a more statistically likely shot is we've seen more likely that, you know, people are thinking that stocks are going to keep falling and so they want to get out prior to earnings. That is what causes these trending moves lower going into earnings. So Roku, for example, is one of the stocks that if you just look at the past couple quarters and you say, okay, what has this thing done going into earnings? Last quarter, it fell like a rock going into earnings. It did actually manage to rally a bit afterwards. But what about this quarter? Fell like a rock. It rallied just, you know, a little bit, just right before it fell like a rock again. So what I'm looking for is anything that can tell me I have a trend prior to earnings because the setups that I like to trade are, well, is there a stock that is going to move, one direction or another in about a 3-week time frame prior to earnings? That for me is my favorite swing trading time frame because, 3 weeks is a good amount of time. It gives you enough time to average in, average out, get yourself a nice swing trade on. Now, the next time frame is going to be about a week prior to earnings. So you can also do the shorter term time frame. Like, let's say, for example, maybe you weren't paying attention prior, because when you're starting 3 or 4 weeks out, you really do need to plan it. Let's say you weren't paying attention before, or let's say there wasn't a good move, or let's say that you don't like doing trades for 3 weeks or more. Well, the next option that you have is just to look about 1 week in advance and say, okay, there's earnings coming up this week in United Healthcare, Taiwan Semiconductors. Is there a likelihood of this thing going higher or lower going into earnings? And then how can I trade that? The third option is, what does the ticker typically do after earnings? So after earnings is where you can also see some pretty big moves. So, if you don't want to, trade a move going into earnings, and you say, hey, you know what, everything's so crazy right now, I don't really want to look at, a trade going into earnings, but let me trade it after. That's an opportunity where you can then say, all right, well, after the earnings report comes out, at that point, we know which way the stock's going, right? So we can just trade the momentum move. So those are the 3 different directional trades that I will make surrounding an earnings report, okay, as swing trades. The other kind of trade that you can do is you can trade the actual report itself, where you get in just prior to the report and you get out after the report. So we can cover that in a little bit more detail later on. But basically, the way that I have set up the tool is to cover those 3 areas. So right here now, when we're looking at statistics and saying, okay, well, what can you tell me about what statistically is looking good right now? We talked about the fact that things have changed substantially over the last 6 months. So what I'm doing is I'm just going to look at the last year of data, because things have changed so substantially. So I'm going to change the time frame to just 1 year, and then basically the stats up here are going to reset, and it's going to tell me, all right, on a 21-day time frame, does this stock normally go higher or lower, and by how much? With Tesla, because it's had these big moves higher plus big moves lower, it's actually pretty neutral on a 21-day time frame. But on an 8-day time frame, it's slightly negative. You'll also notice that there's big moves post-earnings to the upside and to the downside. So it's pretty all over the place, right? So you might look at that and you might say, well, that's not really helpful. The way that it's helpful is by telling you that there's not really any kind of good, there's not really any good edge as far as, is it going to go higher or lower? So that's why, I will absolutely come in and I will look at these individual tickers and I'll say, okay, is there a statistical reason for me to think this thing is going to go higher or lower going into earnings? And sure, we can look at Google. So looking at Google, you can see that throwing this into the tool, it is saying that on average, Google actually trades lower by 2.75%, which is not huge. Usually I want something to be a little bit more, above like 5% for it to be a big move. But if you look at the last 2 quarters, do you see how traded lower and traded lower? So what that means is that after everything changed in January, the trend has been lower going into earnings. Now, does the stock split change things? Oh, it's definitely an additional factor for sure. So with Google, I was personally looking at this going into earnings, and I was thinking to myself, all right, well, it's kind of mixed because before this year, Google actually used to be really strong going into earnings. And now, after this year, we can see it actually trades lower going into earnings. So I would think it would make sense to try and see if it could trade lower again because of the recent trend, but then it has the split. Splits are normally bullish, and I was looking at Google going into this quarter, and I was looking at it saying, okay, well, because Google has had 2 rough quarters, but overall, in the grand scheme of things, if we go back, we can change this again to 3 years. In the grand scheme of things, I mean, Google used to always trade higher going into earnings until everything changed. So I was looking at it this quarter and saying, all right, you know what? It used to go higher every quarter. Yeah, it's been soft lately, but maybe just this one last quarter, it can go higher because of the split. I think it's worth a shot trying to see if it can break out here, but this pattern is not looking promising. You've got a triple top here. You've got resistance at 2,400. Today it was down, over 3%. We're right in front of the split. The only way it can go higher is if it breaks through 2,400. Now, we've talked about a couple that don't really have great stats to back them up, but let's talk about a couple that I really like here, because sometimes, talking about the ones that don't really look great one way or another can help you see the ones that do look pretty good. So Netflix, for example, is one that, the situation completely changed at the beginning of the year. This used to be a ticker that rallied really strong going into earnings, and everything changed when it started falling apart. As you can see, the last 2 quarters, it rolled over and died, rolled over and died. Now we're in this exact same situation where it's rallied directly into resistance. We have earnings coming up, and Netflix is going to report earnings on the 19th, which is next Tuesday after the close. So there's a couple other things that have to do that are important here. Is that A, Netflix is one of the first tech companies to report. B, Netflix has brought down the market the last 2 quarters. And C, there's a really nice technical pattern here. So you've got a bearish pattern. We're rallying directly into resistance. We're overall rolling and dying. And, if you can't get through this 195 area, the path of least resistance is down. So this was one that I had started looking at last month and noting that, getting into it as it was entering the hot zone and trading lower was going to be really the best spot to do it. And at this point, you'll also have a squeeze. So you have quite a bit of reasons to look at Netflix to the downside, in addition to the fact that it's now down 5.15% today. So I really like that one, but I wanted to show you how I come up with some other ones. So this is a scan that I like to use, and I can go ahead and share the scan with you. But basically what the scan does, scan for hot zone entry. So basically what the scan does is it is going to identify tickers that are entering the hot zone. So the tickers that are entering the hot zone are tickers that are coming up on that 21 bar time frame. You can also adjust the scan so that you can look, 30 days in advance if you want, because then what it will do is it will show you tickers that are coming up like in the next week. So when you're looking at the scan and you run the scan and you say, okay, well, I know there's tickers that, statistically they don't really go higher or go lower. So let's avoid those because I'm not looking for something that is not going to move, right? I'm looking for something that is statistically likely to move. So in this case, anything that's up here, these are all going to be pretty neutral. It's just not very interesting to me. They might have a technical setup, but what I'm really looking for during earnings season is I'm looking for a combination of a technical setup plus some statistics. So I'm just going to scroll down, and let's see, okay, is there anything in here that is a pretty big mover? Because what I'm looking for is a big mover. If it's like, 1 or 2% higher, that's not very interesting. So here's a couple different options. We've got Roku, 11%, MSTR, 11%, Spotify, 11%, ALGN, 12%, PayPal, 12%, MTCH, 13%, Dash, 13%, CRSP. So as you can see, there's a lot of different options in here as far as, which tickers have on average over the course of the last 4 quarters fallen to that extent. What's crazy about that is if the average is 12%, you have to believe that it's fallen a lot more than 12% if that's the average over 4 quarters. So those are some good ones that we can look at. You also have a couple down here. Amazon's almost 5%, so it's, pretty decent. I can check it out. SPGI, I'm not really too interested in anything that's not going to be heavily covered in the media because it just doesn't move as much. Team, KLAC, Now, LRCX, CHTR, Square. Now, another thing that I want you to keep in mind is when you're looking for tickers to trade going into earnings and you're looking for themes, you want to think about that overall macro theme that we talked about in the beginning. Which companies will fit into this kind of the kind of spaces that are being negatively impacted right now. So for example, semiconductors been super weak, right? Relative weakness area. Well, now I see that LRCX, which is a semiconductor company, is coming up on the list, and it says negative 9.28%. Now, this one's coming up. The cloud has also been really weak. So if you can find an area that's weak plus an actual ticker that's weak as well, that's just going to give you, more strength in your argument. We also talked about China, how China is weak. Okay, well, you have Alibaba coming up on your list, and that on average is saying it's falling like 7.34%. Then you have, let's see, Team, another cloud company. So basically what you want to do is just try to overlap those ideas that you have with some stats. And then that's when you can kind of get into, all right, well, let's go ahead and look up some trades. So what you want to do is you want to go over to your charts. And if you don't have the hot zone, like I said, that's fine. Just look at the normal naked charts and just look at your setup and say, okay, well, we have earnings coming up. And is this something that, knowing it normally falls 7% going into earnings, is there a spot prior to earnings that I could come in here and I could get short because on average it normally falls going into earnings? So today obviously is down, almost 10%. So day late here on this, but you see what I mean, right? Because it rallied directly up into resistance just prior to earnings and started falling like a rock. So that is definitely one that fits exactly what I was trying to explain and the type of setup that I'm looking for. Now, LRCX, this is another one saying on average it falls 9% going into earnings. You can see last quarter fell like a rock. Last quarter fell like a rock. Quarter before that fell, not very rock-like, but it fell. Now, this quarter, you are actually, you already saw it entering the hot zone back here on the 24th, and it already fell like a rock. So at this point, you have earnings coming up on the 27th, but half of the move has already been had. It says it normally falls about $38. We've fallen from 457 to 375, so it's actually fallen even more than normal. So that's another good example of, looking at one industry and saying, okay, can I focus on a weak industry? And then can I also add a little bit of a pattern in here? Then we have ServiceNow. I like this one because this one is still at a spot that we could actually get in, because do you see how it has rallied right up into a key zone of resistance? Whenever you're looking for a pattern going into earnings, it's always 5,000,000% going to be better if you can get in on a rally to resistance. So, for example, last quarter, you see how it rallied, and you see these moving averages and that price resistance there. That happened right around the time frame where it's about 3 weeks prior to earnings. Then you have the quarter before that. You have a rally going up into this key price resistance zone, and then it just kind of like fell like a rock. So now, same thing. It's rallying right up into resistance. Do you think it can keep going and maintain that same pattern? That is exactly, what I'm looking for and what I'm focusing on right here now. So I'm basically looking for, those combination of factors. Like, is it in a weak area? Is there a trend going into earnings? Is that trend higher or lower? And then is there a good spot that I could get in? So here's another one that's coming up on the scan. With this one, I mean, it made a nice little effort at a rally here. It's trying. It rallied to the 21 EMA. So it's not a terrible spot to get in. I would like a little bit of a stronger rally, but it's still pretty decent. The only thing I'll say about this one is it actually did trade higher on earnings. So from what I've seen, your odds are going to be better if you pick ones that end up, like more frequently tank on earnings, just because it makes the sentiment even stronger and even weaker. Because what happens is, people are afraid. They look at what happened the last quarter on earnings and they say, oh man, I don't want to be involved if that happens again. So this is my mastery watch list. I just worked on updating the whole thing today. And here's, some different screenshots that I took basically after I did this whole process. And the ones that I was coming up with were Roku, MSTR, Spotify, ALGN, PayPal, Match, Dash. And then I went ahead and highlighted some of them here as well. So we can definitely talk about Roku, because I do think Roku is a great setup right now. One of the main reasons why I like it right now is because it has a squeeze. It has a lot of key resistance. It statistically demonstrates that, over the last year, it's fallen almost 11% on earnings or before earnings in the 21 bar time frame. And then over 2 years, it's fallen almost 5%. So it's like, well, those are pretty good averages. Next one that I want to talk about is PayPal. PayPal over the last year has fallen about 12% in the 21 bar time frame. And over the last 2 years, it's fallen about 5%. So PayPal isn't in the perfect spot just today, but the way that you want to look for these setups is you want to start stalking them like 2 or 3 weeks in advance, and then you want to identify entry points for when they actually rally, because you don't want to be coming in here and shorting the lows. Please don't do that. You want to come in when it rallies and, try to trade it lower. So PayPal is definitely one that came up on my list. I added this one to my watch list for the Mastery members. DoorDash is another one that came up. So on a 1-year average, it's down like 13% in that time frame, and on a 2-year average, it's down like 15% in that time frame. So these were 3 that I picked out, and I can go ahead and go through the live charts right here. Let's see. What are the 4 horizontal lines on the far right-hand side? These ones. So what those are here, and I can clear this out of here. So these are a code that Eric came up with. This is the IV 1 standard deviation move. What that means is, based on the implied volatility of the option, where are the market makers pricing this stock to be by earnings? So just based on the IV. So because of how high the IV is on Netflix, it's very high, the market makers are projecting it to be either up at 195 or all the way down at 157. My target on this one is 150. So what that tells me is that based on the IV of the stock, that's a reasonable target. So, actually my target is 156.69. So it was actually pretty dang close. 159. And then the market maker move is one that's going to show up when you get closer to earnings. It can only show up when you're close enough to earnings that Thinkorswim puts the market maker move into the platform, because the white lines are the market maker move. So for example, Delta is having earnings come out on the 13th. And the market maker move is $1.73. So what the lines are showing is that the market makers are projecting it will move $1.73 in either direction, which would be up to 31 or down to 27.5. But based on the IV is a little bit lower. So the IV is only projecting a move up into 30.67 or down to about 28. So let's see. Twitter woes should benefit and direct ad dollars to Google Meta. Yeah, it's a good point. Yeah. So I thought that I had I have the columns on a document, and I should have grabbed them before I started, but I can find it for you at the end, which is going to be in the next 10 minutes or so, and I'll be happy to share that as well, because I know I have it somewhere, but it'll just take me a minute and I will lose my flow. Square has crossover management from Twitter and therefore continue to El Stinko. Toss scanner keeps failing. Yeah, so if you want to open that, all you do is just do setup, open shared item, and then you just want to paste that, preview, and then you just import it. And then that should open. And then what you have to do is you have to add that column. So if I go back to mine, see if I can remember how to do this. I can just show you right here. Okay. I'm going to edit mine. You don't have to do this part because you wouldn't have that part. So what you would do for yours to add the custom column is you would go right over here. You just have to hit scan so it'll populate, and just click on customize. And then what you have to do is you have to find one of the custom columns that you can actually adjust. I think I used all of mine because, well, I have a lot of columns. So all you want to do is you click on one of these that has a little script here. And if you type in custom, you should have some blank ones. Like I said, I used all mine. So if you click on the script, this little box will pop up. And then all you do is you just copy and paste the exact script that I'm going to copy and paste to you. And then you just hit OK, and you have to label it. Column name, you can label it like the hot zone or danger zone or whatever. Thank you, Lorna. Lorna has a thing there. So I do have a document somewhere that I can find, but until then, ooh, that's kind of messy. It's probably not helpful. Yeah, that's not helpful. I'll find you the document in like 10 minutes, okay? Okay, so anyways, after you go through all that and you identify some tickers, which I've identified as Roku, PayPal, Dash, what you want to do is you want to look at your support and resistance zones, okay? So for example, you can just start off with whatever kind of support and resistance methods you use. I like to use Fibonacci. I also like to use moving averages, but you can also just eyeball it for, price support or resistance and overlap those with some key psychological values. So for example, Roku came up on our thing. We can see that Roku has a pretty good shot of trading lower. But the thing is that we want to find a moment to get in because we don't want to come in here and short it at the lows. So we want to identify resistance and come in, when it's closer up to resistance, and then say, okay, well, on average, it usually trades like $10 lower. So let's try to get in an entry around here, and then let's identify our target. So that's one that I really like for this quarter in general. Another one is DoorDash. So what I found the last 2 quarters, especially, is that these recent IPOs, they have just been like completely crazy prior to earnings, especially because so many people bought into them up at the highs. And so when you're looking at this and you say, okay, well, what about DoorDash? I mean, it used to be at a price of $257, if you can believe that. It's fallen the last 2 quarters going into earnings. It's coming up on the scan. What can I do with this thing? Oh, well, look at there. You've got a ticker that rallied right into a key area of resistance, and you also have a squeeze. You also have earnings coming up. There's plenty of time. And it normally falls, on average, like 13%. So that to me looks like a great one to start working some entries because it has rallied up into that resistance zone. Well, let's actually not look at anything that's happening, in the next 2 weeks. I want to look at something that's maybe happening in August. So you can add some more time to this. And you can say, all right, well, can you give me any other tickers? DoorDash is still coming up because that's in August. SPLK is at the end of August. We forgot to look at PayPal. And then you have Zoom. So Zoom isn't reporting until the end of August. So this is one that I would start stalking closer to the beginning of August. Let's see if there's any other ones in here. SRPT. Ooh, Snowflake. That looks like a good one. We already talked about Snow. We have PANW. We have Disney. We have SRPT. So basically what I do is I try to start a couple weeks in advance, and I like to do this on my watch list that I make in the mastery. And so what I do is I just come in here and I say, okay, well, I'm going to start running the scans a couple weeks in advance because you have to know prior to it entering that danger zone, or I used to call it the hot zone because we used to trade higher. I've been calling it a little bit more the danger zone more lately because, well, everything's been trading lower. So we're entering the danger zone. So you want to start a couple weeks in advance, because if you're going to try to find a good entry point, you're not just going to find it, that exact day that you need to get in. You need to have it on your list of hot tickers. And then when you have a day in the market where the market rallies, that's how you can get in. So usually what I do is on my mastery watch list is I post, which tickers are coming up on earnings, which tickers are going to be entering the hot zone, what are just like a couple of my hot zone picks. And then I also get into like sector overview and the Phoenix Finder and all that other stuff, which we didn't even have time to get into today. So you want to start a couple weeks in advance doing all of that research so that when the tickers actually, start triggering, you can go ahead and get in. So one of the ones right now that I'm already in is going to be Shopify. This one had a split and kind of just fell like a rock. It did rally in the past few days, but now it's trading lower. So I do like that one. PayPal is another one that historically falls going into earnings, and I think this one's actually going to make a new low. Next, let's see if there are some that are going to be coming up later on, like in August. So, for example, the cybersecurity stocks like CrowdStrike have been pretty weak as of late. In the last couple of quarters, they've fallen pretty hard. So those are ones that I'm looking for entries on because they're not going to be reporting until later on in August. Then there's a question. Some people will buy at the money straddles before earnings, expecting the IB options to increase, but you're fighting the time decay. Yeah, so the other trade that I didn't get to get into a whole lot here is actually going to be the opposite of that. I never buy straddles. For me, I'm directional in nature, and I'm either going to pick the upside or the downside, and then I'm going to try to buy the calls or the puts. And I'm going to see if I can get that to trade, in my direction. But I will actually sell the straddles on earnings. So one common trade that I will do when an actual earnings report comes out, particularly if it's on Thursday going into Friday, is I will actually sell those straddles. And the reason for that is because the implied volatility absolutely, increases going into earnings. The banks, it's not as exciting as something like, Netflix. Like if you look at this graph right here, this is the implied volatility over the course of the quarter. The implied volatility is at the peak pretty much right before earnings. So for different tickers that have really high implied volatility, a really quick earnings trade you can do is just come in, and before the report, you can sell the at the money calls and puts, and that is actually where you can try to trade the IB crush. But I never actually buy the at the money straddle prior. Where can we find the script again? So I said that I was going to get that for you right here and now at the end of the session, because I know I have a document somewhere, and it would be easier for you to find if I can give you the document. So let me go ahead and look for that document, and let me know if you have any questions or tickers that you want me to look at, as we are nearing the end of our journey. So let's see. The custom columns are pretty nifty. I like those quite a bit because that's how you can really easily go through and try to identify those, try to identify those tickers that are really moving. All right, so here we go. Found that. And let me go ahead and share that with you. Oh, if you're interested in more of this kind of analysis, this is pretty much what I do in my mastery. I also, I post some things on Twitter and the Gold Room and stuff like that, but definitely, where I post the majority of the analysis is going to be in the mastery. So for this month in particular, we're going to be doing a bunch of different breakout sessions as well. I'm going to be having a live trading session tomorrow where I'm going to be looking at a lot of these tickers, probably going to put on some trades. I never know exactly what's going to happen based on, what the market's doing and all that stuff. But I do have a live session in my mastery tomorrow for those of you who are already in there. And then for anyone else who is interested in joining, we're actually having a $47 trial this month, which you can find right here, where basically you get access to all of that, analysis and research, and then you don't have to do it yourself. So here is the list of, here's going to be the list of the custom columns for you to go with the scan. So I'm going to go ahead and post this, which is right here. Check out this document to add the custom columns to your hot zone scan. So the reason why I can't share the columns directly is because Thinkorswim just doesn't work like that. So unfortunately, you do have to add them yourself. It does not share it, it just doesn't share the whole thing. So sorry about that. But can you please show one more time the scanner? Yes. I can show you that. Ticker review, ENPH. So ENPH is kind of a weird one, I have to admit. And so Sam was talking to me about this one because he was like, Danielle, look at this. This is such a nice bullish setup. And I threw it in here, and I was looking at it, and I completely agreed with him that the setup looked great. He was talking about it back in here when it had this daily squeeze. And the one thing I didn't really like about it is just that it didn't line up with the, it did not line up with the actual stats. So I do kind of prefer the tickers where everything is aligned. So for example, the stats are telling me that it normally falls going into earnings, but yet I have a bullish setup. That just adds a little bit of confusion. I like it to be a little bit more, clean where it normally falls and it has a bearish setup. But in this case, the technical setup definitely prevailed, which is why I always want to combine the stats with a technical setup, because you can see, it had a great, bullish setup. You've recovered off the lows really well. You are above all your moving averages. You've got a squeeze. You've got earnings coming up. So I would say that this one is a little bit more of an example of maybe one that and I can go back and the reason why I keep changing the data is because when you're looking at something that, previously before the bear market hit was just on fire prior to earnings, you are going to have some of these tickers where you say, okay, well, the last 2 quarters, it rolled over and died prior to earnings. But before that, this thing was on fire going into earnings. So sometimes, you do have to take those longer term trends into account while also looking at the immediate setup. And then Definitely. I mean, this absolutely has macro factors at play. I mean, you have historical heat all over the U.S. right now, especially here in Texas, which has been absolutely crazy. You've got, water shortages. There's all kinds of reasons why people would be interested in this kind of thing right now. So I will say that this one's not aligning with the short-term stats. However, it's aligning with the long-term stats. And I think it's a great, bullish setup. As far as the scan, so here's the scan. You can change this part. Earnings has an earnings announcement in the next 32 bars. So the way that I gave it to you, it's set to 21 bars. 21 bars means it's basically entering the hot zone right now. So when you set it up that way, you're only going to see tickers that are just now entering the zone. Okay. So you have Square, Alibaba, SRPT, ILMN, Starbucks. Okay. But that's why I said you can move up this time frame where you say, hey, you know what? I am interested in tickers that are entering the zone right now, but I also want to see tickers that are entering the zone next week. Okay. And then you can also move this one because this one says it doesn't have earnings in the next 15 bars. So basically this would just take out everything that's reporting in the near future, because if something entered the hot zone like 3 weeks ago, it's not really going to give you a setup right now. You missed it. Now, I didn't spend time going over these bullish setups mainly because I really just haven't found anything in this market I actually want to buy except for maybe Google. But it definitely works, both directions. So as you can see, there are quite a bit of tickers in here: Moderna, CAR, Marriott, BNTX. There's still some tickers in here that are showing a bullish, trend going into earnings, which I think is kind of crazy. I personally don't like to go against the overall, trend of the market. If the trend of the market is lower and you're trying to find like 3 tickers that maybe will go higher, it's like, you're just swimming upstream. So when you look at Marriott, for example, yeah, I mean, it did rally the past couple quarters going into earnings, and it is coming up on the zone that it could maybe rally, and it is down on lows. And sure, you could buy it, but if the whole market falls, is it going to take Marriott with it? It will, because Marriott's not like some sort of amazing, honey badger type of stock. Then you have something like Moderna. I mean, this thing is showing you that the stats are really strong, but you also have to keep in mind, what was happening throughout here for Moderna. And that's why this is one that I would cut down the data and I'd say, you know what? I don't want to look at the last 3 years. I want to know, the last year, what has happened. And over the last year, you've seen Moderna trade from, $4.97 down to $1.75 now. Danielle, thank you for spending this extra time with us. Yes, absolutely. And then does that answer your question about the scanner? So basically you just scan, and then what you have to do is use that document to add the custom columns, because these columns don't come over, which is going to be what the earnings date is and then the percent move. And then if you, add more time, you can find ones that are coming, later on. The LRCX chart you reviewed, trading near its 3 ATRs. This is setup. Would you pass on for now and see what happens? Yeah, so anything that's super extended one direction or another, I definitely would wait, because what I would prefer to do is, well, first of all, if you're looking at it right here and you can see that it's already been in the hot zone for a week and a half, then what that tells me is that this is one that I would have wanted to get into when it got into the hot zone. So you can see that it worked. It's just, now it's just a little bit late. So for this one, since I'm just seeing it right here today, I would say, you know what? I missed the entry on that one. I could try to do a short term fall into earnings for just the 8-day move, because this is still saying that it will fall like 8 days in advance. But I would really try to get it on a little bit better of a rally. It's rallied decently, 378 up to the 8 EMA, but I still don't really like to short at the 8 EMA. I'd rather do it at the 21 or the 34. So unless it rallied, all the way up to 433 tomorrow, then I would probably just say I missed that one. And if I missed it for the pre-earnings move, then I would just either wait to trade it on earnings, or I would trade it post-earnings. Either one, or just, you just missed it. Let's see. So what's the question? What is the difference in the red versus yellow? The difference in the red versus yellow is if it's yellow, it's just basically a neutral move. So these moves are less than 1%. So if it's giving you a stat and it's saying that on average it moves like 0.87%, it's just not statistically insignificant. You really want to find something that is like 4, 5, 6% move, because that shows you that it's, more statistically likely. So the yellow ones, I would just say there's nothing really too critical there. You really want to focus on the big movers. Yeah. Any comments on playing the post-earnings drift? Oh, absolutely. So as far as the post-earnings trade, right now I'm really just doing the pre-earnings trade and then actual earnings trades. And I'm going to have some bonus sessions in the mastery this month where I teach those setups. Yeah, yellow is good for condors on the actual. Yeah, you're right. Absolutely. That's what's great about the stats. You can use them in so many different ways. But anyways, normally as I get into like the end of July, that is normally when I start to play the post earnings moves. It might come through a little bit sooner this month, just because of the way that the market is. But usually by the time it gets to FANG earnings week, which is the last week of July, that is normally when, if there's any kind of bullish momentum, it usually just kind of drops out. And that's where I try to trade the move lower, which is what I call the FANG over. This is like the hangover after FANG earnings, because, well, at least in the days of the bull market, when we would get these really strong moves going into earnings, usually what would happen is the momentum would just kind of fall out of the market after earnings. And so I would trade that. But now, especially with the way that the market's been, it's like, it's not even just a FANG over. It's like, all right, you get this big move and then it just dies. So I'm definitely looking for that this quarter, but it entirely depends on how these reports happen. Because even though I'm bearish and even though I'm looking for the macro situation to continue to be negative, if earnings comes out and it's awesome for some reason, then hey, I don't care. Like I'll trade that post earnings move. Like for example, one move I love to trade is like this kind of move right here, where you see how there was a really strong move, earnings, it gapped up and it just rallied. That's called a 2x move, and those are great for post earnings momentum movers, but we haven't seen one of those in a long time. So I'll trade it if there's a massive gap up and momentum higher. I'm not too attached to the idea that it has to go lower, but one thing that I have absolutely been doing, especially the last 2 quarters, is like when Netflix falls 30%, like just shorting it, trading it lower. Where do you find the document showed with the custom columns? So I just posted it up in the presenters post area. It says, check out this document to add the custom columns to the hot zone scan. Would you sell a put spread far out of the money? I don't ever sell put spreads far out of the money, because when you do that, the risk reward is really bad. So if I'm going to sell a put credit spread, then I am going to sell it at the money. Please tell us how to get the hot zone tool. There should be a link to that somewhere. Do you know what the link to the hot zone tool is, Lorna? I think it should just be in the simplertrading.com/store. Oh, thank you. And then, yeah, the document. Yeah, so the document to the scan is up there. Yeah, and then, I mean, if you want to check out the trial of the mastery, like I said, that is going on right now. You can check that out. I think that's for a month. Should probably make sure it says there, but I think it's for the month. So anyways, especially during this month here in particular, I'm going to be having a couple different, bonus sessions and all that kind of stuff. I'm going to be having a session tomorrow at 11:30, and I'm also going to be having a bonus session on Wednesday at 4:30. That's Central Time. And then these are the regular sessions during market hours. Then I'm also going to be having another bonus session on the 20th at 4:30 as well, to just kind of go through earnings season. So, I mean, definitely, there's quite a bit of analysis and stuff like that in the mastery. I went ahead and showed you kind of a little bit about the watch list. So if you want to learn more, you can definitely check that out. Other than that, I think I answered all of the questions. If you have any other follow-up questions, feel free to email me. Oh, did I miss one? Question above skipped. Getting some red highlights on the custom column code. I'm not sure about that. You just have to copy it and paste it exactly from the document. See, did I miss a question? Oh, new to spreads. When you sell the straddle before earnings, are you setting yourself up for any trouble if the stock rips in one direction or the other because you're double naked, or does one side cover the other? Thank you. Sorry, I didn't see your question. Okay. So, and then that goes with the other question too. So far, you discussed trading patterns and trends into earnings. How about trading the IV crush? So I can't believe how fast an hour went by. Okay, so I'm going to answer both of those questions at once. And let's just do the example with JP Morgan, because JP Morgan is reporting earnings this week. Okay, so first of all, if your goal with earnings trades is to make money on the IV crush, typically what I've found anyways, the way that I do it, is I sell the at the money iron condor. So, and here, I guess let's use Pepsi as an example, because Pepsi reported after the close today. So when you're trying to trade the IV crush, okay, on a ticker, basically what you're doing is you're saying, hey, you know what? The implied volatility has gone higher and it's gone higher, and it's basically like right around its peak for the quarter because of earnings. Implied volatility in the options market is going to go up until you hit earnings, and then after earnings, it's going to collapse. That's like one of the only knowns about earnings. Okay. So the way that you can take advantage of that is by selling calls and puts, or you can just stick to one side, like in the Pepsi example. For this kind of ticker, this ticker is like so neutral, it's like up and then it's down. For something like that, I would just make it neutral, which means selling the calls and the puts. However, if you have some sort of reason to say, I love Pepsi, I think it's going to explode to the moon, you could just sell the puts instead of the puts and the calls. Does that make sense? Now, as far as selling a straddle, what that would mean is that you're selling the call and the put with no protection. And then, yes, you would be double naked, even though I've never heard anyone call it that. And now I think it's really funny. You do not want to be double naked. This is not a good situation. And yes, absolutely, you can set yourself up for bad trouble. And what can really set yourself up for very bad trouble is on a move like this. If you sell naked calls and naked puts and, then the stock falls 30%, which used to be crazy, but it's actually pretty typical in this kind of environment. I mean, you could completely wipe yourself out. So never, ever, ever do that. I don't think it's a good idea. What I will do, however, is I will sell the straddle protected as an iron condor. So, for example, going back to the Pepsi example, Pepsi had earnings today, and I didn't even look yet to see what the results of that was. But the reason why I liked this one for an idea for a condor is because it was right at a key psychological value, 170. It's half up, half down. They beat half the time, they miss half the time, so pretty neutral. And if you look at the options chain, you can see that there's quite a bit of open interest at the 170 strike. So typically, if you're going to do that, it's better to do it with high open interest. Now, when you're looking at selling a straddle, what that would mean is that, let's say you sold the 170 for $2.99 and you sold the 170 here for $2.20 with no protection. That means you're taking in a credit of what, $5.20, and you better hope it doesn't move more than $5.20 in either direction. Now, if you do it in a protected way, which is the way that I do it, which is where you turn it into a condor, which is where you say, I am not going to sell the straddle, but I'm going to sell the 170 call and the 170 put, but then I'm going to protect myself. Because if this thing has a catastrophic move, I don't want to lose, an unlimited amount of money. So the market maker move is $3.42. So where could I put my protective strike that, would make sense? It would give me a place. So like if I'm selling the 170 call and I'm trying to, cap my risk somewhere. Well, if the market maker moves 342, it would make sense to cap it at like 175, right? So then if you're selling the 170 put and you do the same thing where you cap your risk $5 away, that is going to be at 165. So now what happened is instead of selling a naked straddle where you're taking in $5.20, and you better, pray to your gods that it doesn't move more than $5.20, because if it moves $20, you're going to be in a world of pain. Instead, you protect yourself and you only get $3.43, but there's absolutely no possible way that you can lose more than $157 a contract, because you have protected yourself with the strikes that you have purchased. So I personally much prefer a world in which I can protect myself, not give myself unlimited risk with the condors. That makes sense? Doubled naked, only good on date night. So funny. How far in advance do you put the condor on? I usually do it within 30 minutes before the report. So if I usually put on all of my earnings trades like at the close. So for example, we have Chase, Morgan Stanley, Cintas, and Taiwan Semiconductors on Thursday before market open. So on Wednesday before market close is where I would be looking at all those. Then these companies are reporting on Friday, so I would look at them Thursday before market close. Typically, how long post earnings do you try to capture? A few days or more like weeks? Do you typically use fries, spreads, or puts or calls? I pretty much always use flies and spreads, especially because of the volatility in the market. Before, when the VIX was substantially lower, I used puts and calls a lot more often. But with the volatility, spreads and flies are not only going to be cheaper, but your risk reward is better anyway. So that's typically what I do. And then as far as like how long do I stay in the trade? I mean, I don't usually put on trades based on int usually 3 weeks is the max, but it's not like if the trade comes through in 2 days, then it came through, right? So I usually do everything based on target. So for example, on Netflix, I want to target really between 160 and 150. So, if tomorrow this thing collapses, then it met the target. Sometimes it, meanders for 3 weeks and you either have to roll it out or it finally will come through. I usually try to give myself like 3 weeks of time, but if it comes through sooner, then that's okay with me. All right. Did I get the questions this time? Everything. Excellent. All right, great. Well, if you have any more questions, let me know. You can also send me a message on Twitter. That's usually a pretty good spot where I am pretty responsive. You got to watch out for the fakers, though, because there's some fake Danielles. So this one is my real profile. It's just Trader and then my name, Danielle. So you can check that out, or check out the trial. Other than that, thank you for joining me. I hope you had a nice Monday. It's definitely going to be interesting in the next couple weeks. If anything, no matter what happens, there's definitely going to be price movement. And these reports are definitely going to be, a major catalyst. So I will look forward to walking through all that with all of you. And I hope you have a great rest of your evening. I will see you next time.